Thanks very much for joining us. We have a very exciting panel. Today we're going to be talking about mortgage lending and its intersection between tech innovation and regulatory pressure. So we're going to cover a number of things. Before I give the brief introduction, just to introduce my panelists quickly. So my name is DJ Lind. I'm a partner at McCarthy Tetro in the financial services space. To my left is Malik Yacobi, who is the CEO and co-founder of Nesto. We have Justin Herlick, who is the CEO and co-founder of Pine. And we have Alab Ab-Oraith, who is the deputy chief economist of CMHC. So today we're going to be covering a lot in 30 minutes. Kind of 5 topics we're hoping to cover are first talking about how technology, and you can't go to a conference without talking about AI, so how AI is influencing the mortgage underwriting process. We're going to talk about the customer experience. We're going to talk about some of the regulatory and policy issues, and then market trends and the economic issues, and then we're going to try and crystal ball and think about where mortgage lending will be in 5 years. So to start, we're going to talk about some of the use of AI in mortgage underwriting. So this is open to everyone on the panel. What are the most impactful digital and AI advancements in the Canadian mortgage lending, and how are they shaping underwriting, fraud detection, and the overall borrower experience?
You start, Justin.
Happy to. Thanks. I think that AI, at least how we've seen it at Pine, has had the most impact in providing a better customer experience. So what we do is we'll use it to review, transcribe, offer areas of improvement for our mortgage team. So even though we're a digital mortgage, all of our customers or our borrowers will go through a mortgage advisor, right? But mortgage advisor is on a call, they're trying to help you, they're trying to provide you the right advice. Sometimes it's hard for them to keep track of everything that's going on, especially if it's a long call, 30-minute call. So how we've been using it is to review and provide feedback on those customer interactions and tie together the whole story. So if you have some information that's unstructured in the form of data in like a pay stub, that's in a call, in an email, and a text message, we're constantly reviewing that to say, okay, where are areas where the customer's needs might not be addressed? And that's something where a language model is really, really helpful because it can take in essentially unstructured data and provide concise feedback and next steps. And you would need an army of note takers to do this otherwise.
Great. I agree with everything you said. We, at Nesto, we have the chance to manage over 73 billion of mortgages across Canada, so different segments, different type of clients, and so on. And we've invested for the last 7 years on a data platform that structures every data input. And when LLM came out, it was like the aha moment. The reason why we've made all these investments, because now we have structured data and we're able to process and learn from all the mortgages that we've processed over the years to be able to apply AI models that are auditable, that you can look at every step, the decision that we're making. And I think it's just transformative how leveraging AI to the underwriting specifically, this is where we mainly focus our effort right now. It's how can we apply AI on underwriting to provide a better experience to the client and make sure that we check all the boxes that we say we're supposed to check.
Thank you. At CMHC, well, first of all, I say we've got massive amounts of data and we're probably underusing it. AI, it's starting to come in all over the place. The slight caveat in our case is that we want to be able to explain decisions and consequences. So to the extent that the AI is a black box, that's a little bit of a hindrance. But we're trying to adopt it in anywhere we can, but there are limits if we don't really understand what's going on.
So we've heard about some of the benefits, I guess. Let's also talk about what are some of the concerns about using AI and some of this technology. What are the kind of the key risks or privacy concerns, and how can that be mitigated?
So I think there's many concerns, and people should be concerned about using AI and how to leverage it, and we all heard about hallucination. Maybe I will tell a quick story because we're always looking for efficiency. And when ChatGPT first came out, one of our head of operation at Nesto, we kind of obviously anonymized everything that we've put, but it was a test. Let's put our guidelines out there. Let's put a fake application out there, and let's see if ChatGPT could make the right decision with the right rationale and everything. And it was like magical. First answer, perfect. Then we went to my co-founder and CTO, Karim, and said, hey, look, Karim, you're done. We'll do everything with ChatGPT going forward. And then he said, I'm not sure. And then he ran, I think, 1,000 tests, and most of the tests did not answer the same way or the right way. So we just got lucky on the first one. So I think it's about making sure that when we apply AI, we do it in a very deterministic way. So we break it down to single, very simple aspects, so we can audit the answer and make it very predictable. Like, we need to always be able to get to the answer that was supposed to get out when we were doing it. But anyway, so fast forward today, I think it's about making sure that you're able to audit and test and shadow every decision that you're making.
Yeah, I can add on to what Malik just said. So I'll kind of address two parts of your questions. One is like, what are general concerns with implementing this technology, and then what are some of the privacy concerns with implementing this technology? So when I think about AI, I like to share, I think the biggest challenges right now are for people who are moving from, programming is typically a procedural process. Procedural means you write rule A, you write rule B, you write rule C. Okay, if it happens, you know exactly what happens. But as Malik said, these AI systems are non-deterministic. So the same input can yield a different result, which is like not how programmers are used to coding things. You know, 1 + 1 always equals 2, not 1 + 1 sometimes equals 2 and most of the time, but sometimes it's 3. That's like really hard. So what I found is barriers to enterprises, and we even experienced this at Pine, of getting AI technology into production, so into like live code, is you need to build the evaluative testing framework up front. So it means you have 1,000 cases where the inputs stay firm, and then you have the kind of, you could call it black box, but your AI, and you see, okay, what is the output I'm getting from that? And if I make a change, how does that affect my 1,000 different evaluative cases? But unlike procedural coding, you won't get the same answer every time. So it's a very different mind shift for engineering teams to put these technologies in place, because they're used to, I get this, I get that, right? So that has been a big barrier, and that can cause unexpected results. It might look good one time, you put it in production, you're getting a different result, or it's getting steered, it's trying to answer your question in a way that makes you happy rather than the correct answer. So there's all these kind of implementation challenges that are new. I think it's going to take many years for people to get used to this style. And then on privacy concerns, you need to treat it like another subprocessor. Like everyone uses a subprocessor. If you're using Gmail, you're using a subprocessor. So are you comfortable with this? What is their quality of their data security? What do they have available? And then choose your vendors accordingly that way. Some models you can host in your own data center. Some models you can't. So it depends. And you got to trade off the privacy with maybe the quality of the product that you're having and make the right determination for your business.
Yeah, I agree with that last concern. There's always a leak of data sort of leaking out, and some privacy issues from that, even if you're writing a standard report. If you're using ChatGPT to just look at the data, then the data can leak out, especially if you're responsible for market-sensitive data. The other, again, something I said earlier, the other concern I have is the quality of the raw data. So it's, and because at CMHC we use a lot of data from other people, I'm always a little bit concerned that the quality of the raw data is not always 100%, and then if you used AI on that, then who knows what you get.
Maybe on that, one thing that we found with AI, and it's quite interesting because we're running this project on underwriting, so we're shadowing every deal that we're doing with our AI underwriting, which kind of become an amazing auditive tools to audit. So as we're doing that, we found that actually AI can find mistakes in the quality of data that human did parse or didn't integrate and so on. So I think AI will also bring more accuracy to everything we're doing in terms of data inputs in the different systems.
Great. We're going to move into the second topic, talking about affordability tools and the consumer experience. How are the technological innovations and data-driven tools helping borrowers assess financial readiness in selecting suitable mortgage products?
So I think like other implementations, it's allowing people to have a lot more conversational flow. So you can chat, you can say, okay, what's my financial readiness? Before, maybe that tool was a calculator and the calculator had 5 inputs. Now you can talk to a bot that might have the same knowledge, but it can answer different flavors. Say, okay, what if I added my like a parent as a guarantor? What would it do if I increase my down payment? And it can be more natural. So I think that's helpful. I think for certain use cases, it is really nice because there's an unknown number of questions that could be asked. And it essentially allows people to have a more personal approach to their experience, especially in like financial qualification, which is what we deal with at Pine.
Yeah, maybe I'm not the best guy to answer on this one. My whole answer on affordability is that we need to build more housing. So.
We'll get to that.
No, I agree with Justin. The good thing about technology is it should not judge you. You should be able to share everything you want. So if you want to, bring your whole family on your mortgage, you can test what would be the impact about it without necessarily having to talk with a mortgage advisor that might actually judge you on this. So I think having these different possibilities, it's quite interesting. That being said, it doesn't change how many homes are available, and it's at the end offer and demand that will dictate how affordable it is.
And how are these tools influencing the borrower behavior and product selection? Are you seeing changes with the chatbots and that kind of thing?
I think we're just seeing more of meeting people on their terms. So we always said this when we were starting Pine, which is, if someone wants to apply at 1 a.m., if someone wants to do it from their home, if someone wants to do it on their lunch break, give them that availability. I think it's just expanding that comfort where, like, maybe 5 years ago, before COVID, people had to go to a branch or they had to wet sign, print off documents, send it back. And I think these are just, again, more ways to give people that flexibility. So yeah, we see a consumer preference towards it. I think, though, that for the deeper you get into it, let's call it mortgage a funnel, the deeper you get into the funnel, the more you want, or at least customer expects like a human to be dealing with it. If you're saying, hey, I'm expecting to close my mortgage on Thursday and like I haven't heard from my lawyer yet, you don't want a chatbot like kind of answering that. You want your lawyer answering that question. So the higher you are, the easier expectations consumers have, the closer you are to the most important aspects. You wouldn't want an AI today releasing a wire.
We need to disagree on something on a panel. So I think chat are amazing on upper funnel, like Justin said. But as we've made a deal with CMLS and we're really deep into the broker channel and the broker advice to customer, we also partner with IG Wealth, and it just got me to discover the power of the advice and the human contact one-to-one. Even up at the funnel, it's really powerful. And I think bringing tools to create more efficiencies to these advisors and these people will make a big difference in the future. And when we started Nesto early on, we're like, it will be a full digital experience with no human touch. And then at some point, we've looked at our conversion funnel, and one of my investors called me and said, Malik, we have a problem. Canada is not big enough for you to hit your number with your current conversion. So you need to bring more human in the funnel. And now that I see the impact of the brokers and so on, can it be more true?
We're going to move into the third area, regulatory and policy issues. What recent regulatory changes have most impacted mortgage lending, and how are lenders adapting compliance strategies?
You start, I'll answer.
Okay. The regulatory change that most impacted Pine and our customers is probably not one that most people think of, but it's the changes to the insurability rules of loans. So for the longest time, the limit had been $1 million purchase price is your ceiling for allowing insurability. And They move that in certain circumstances up to 1.5, which is great. What that does for Pine and what that does for the consumer is it means that there is more options available to them, because as soon as the loan can qualify for securitization funding, it means that it's going to be a lower cost loan for the consumer, at least directly, because their mortgage interest is lowered. And it means that more providers can provide a competitive option. Anytime you have a market with more people offering, it's going to be better. So that's the one that's changed me. My hopes for the CMHC is to standardize the rules. So it's not just high ratio loans qualify for these new limits, but all loans that meet the insurability criteria qualify for these new limits to keep up with the home prices. How that impacts affordability, I think, is a multi-vector question. You know, on one hand, people can get in, and then on the other hand, it pushes prices up. So that's not something I know how to calculate, but that's been the change that's been most impactful to us.
I will agree on this one. I think that was a great start. We need to get to the next step, I think, as soon as possible, so we can get all these loans insurable, so then we can bring more competition to bring the rates down and bring choice. I think it's something that we talk a lot about, is how do we bring more competition to this market? Well, access to capital for a player like Pine and Nesto and others to deploy and reach these customers. It will help affordability overall, because it will bring more competition on the different segments in the market. So waiting for that change. For sure.
Yeah, I think from a purely CMHC perspective, I'm not sure that the move to 1.5 million had much of an impact on CMHC, because I think most of the impact of that was in, say, Toronto and Vancouver, and CMHC doesn't have quite as high a market share in those areas, so there was a little bit of a limited impact. I think the other major change that has happened was not really regulatory, but it seems to me from the data that there's been a lot of movement away from the 5-year fixed. There's a lot of distribution now, people 3 to 5 years, people going into variable mortgages. It seems that there's been a movement away from that 5-year fixed. I'm not sure I understand all the implications of that, but that's been fairly noticeable in the data.
So we've talked about a little bit about the supply shortage of homes in Canada. So how effective are government interventions such as the Build Canada Homes and the innovation building methods in addressing the housing crisis?
You want? I can start. Okay. So maybe one part of our business that is less known is our CMLS division. We handle about 15% of the multifamily loans in Canada with that business. And we also work closely with CMHC on the ACLP program. So there's a lot of program out there to help building new units for Canadians. That being said, it goes back to the initial problem. We need to be able to build faster, and the issue is the builder. When we speak with them, they need to make sure that their program will be profitable. So right now they're mostly into building rentals, because that's the only way you can build a program profitable. And I think that's a challenge, because we need to make sure that the builder are able to make profit into building these new units for Canadian to get access to home ownership.
Yeah, there's a lot of things that could be disentangled in this question. My view is that there's not really a serious problem on the financing of construction. I mean, having said that, construction costs have gone up a lot, but I don't know that there's a systemic problem with the programs themselves. Most of my attention has been focused on pointing out that the regulatory burden at the municipal level is quite high. So the approval delays in Toronto and Vancouver, it's a multi-year process. So I think that's where the core of the problem lies. At the federal level, the federal government can come in with financing, but I don't know that this is the major issue. From what my understanding, programs like MLI Select and the apartment construction loan programs are quite effective, and I don't see major challenges with those. There's maybe a short-term issue in Toronto that we can get into. But I don't think the challenges are on the financing. I think the challenges are more on the actual construction side, on the regulatory side, getting land rezoned, getting access to sufficient land, the price of land, that sort of stuff, rather than the financial side.
We're not in multifamily at all, but I think I generally agree. So my interpretation of this is we have many qualified, really exemplary home builders in Canada. We don't have a shortage of home builders. So we have people who can build homes. That's fine. So we don't necessarily need the government to build more homes. What we need is to bring the cost per door down so these projects become viable. That could be, maybe some changes to the financing program, but again, municipal level red tape that just creates a very high burden to get a project off the ground. So I would, I don't know what level of government I have to be in to impact this, but if I was in the government, I would focus on that because you're just seeing less things. And Toronto, I don't know how many people here live in Toronto, but I guess most people in this room live in Toronto. We have a different housing problem, right? Like now we have a flood of condos that people don't want or they can't live in, and the prices are coming down, but not fast enough. And what we're going to see is projects haven't been started for the past few years, and then in 3, 4 years, 5 years, we'll be back in the same spot where there's not a lot of availability, right? So it all comes back to making that a smooth process, not necessarily introducing a new home builder.
And then you asked about Build Canada, so just to clarify a bit on that, my understanding is that Build Canada will be concentrating on social housing. Just to put numbers on that, our best estimate is that social housing is about 4% of the housing stock in Canada. Now, even if you were to get the government, to double that to 8%, it's still 8%, and so 92% of the market would be private. And so what we need is a lot more private sector investment in rental construction and in apartment construction or home ownership construction.
We're going to move into the fourth topic, market trends and economic pressures. What are the main economic stresses facing lenders and borrowers in 2025, and how are risk models evolving in response?
I think predictability, it's really tough right now. I mean, for lenders to decide to invest, for consumer to decide to make the move. Am I going to keep my job? Is there something happening? I think we definitely hope we'll get into a more predictive market for Canadians, because rates we see will be hopefully continue to go down, but still the market overall doesn't seem to be confident on what's going to happen next week or next month. I think that's the biggest issue.
Yeah, I think for consumers, it's the same story we keep hearing. The cost of living has gone up. Mortgage costs have gone up. Yes, they've come down, but still much higher than the 1.5, 1.7% mortgages had 5 years ago. So when people come into a renewal, which many people, majority of Canadians are going to experience in the next few years, is starting now. They want to know, hey, is my job exposed to all these economic issues that we're starting to see in the economy? Is that the best deal I'm going to get on my mortgage renewal, right? So if food, electricity, everything has gone up, but your income has not gone up accordingly, that puts a lot of stress on households. So that's what we continue to see. It's definitely not a unique story. And you're seeing people on the margins where, that extra push on the interest rate does put them in a more precarious situation where their economics or their family household is distressed. So it's definitely happening.
Yeah, I'll just pile on. So the macroeconomic situation is extremely uncertain. Obviously, with what's happening south of the border, we really don't know what's going to happen. So, and that is manifesting itself in higher unemployment here in Toronto in particular. Youth unemployment in Toronto is quite high. There's weaknesses in some of the services like retail and so forth, and that is feeding into rental growth being quite weak. But then on top of that, in the short term, you have a lot of condo supply. So at the moment, there's a lot of uncertainty, weakness, etc. But then, as you were saying, nobody's putting shovels in the ground at the moment on new construction. Rental is holding up, sort of, but condominium construction is drastically down. And so what I'm anticipating is that in 2 or 3 years, assuming the economy recovers, population starts to grow again, we're going to be back in a shortage situation.
And so is the Canadian mortgage market in a more resilient place today than a year ago, or is it more fragile today?
I would say the system is working fine. It's more the macroeconomy that's weak. I don't think I don't see any sign of weakness per se in the mortgage system. I've been thinking, are there tweaks possible? I have questions about whether the condo model will survive over the long term, but this is just me being speculative. I think there are going to be programs more related to prefab construction. So there's things that can be improved around the place, but I don't see any fundamental weakness. Now, having said that, the level of household debt for Canadians is incredibly high by international standards. So there is a vulnerability there, but my response to that would be to build more housing.
Any other views?
Well, I say I've heard Dan from Co this morning saying that Canadians need more ambition. We need to be more ambitious. We need to go faster. I think that's our biggest issue right now. There's no growth. We don't seem to move fast enough. So,
and I guess the last question on the macro is how are lenders and borrowers adapting to the current interest rate environment, and what strategies are being used to manage volatility in the market?
So Pine's a relatively new lender, so we've not gone through a whole renewal cycle of our cohort of customers, but a lot of our customers are coming from other lenders at the time of renewal trying to save. So if the question was how are they handling this environment, I think people are taking a lot more advocacy for themselves. They're not necessarily sticking with their existing lender on renewal. I've heard from my peers that have been going through their renewals now saying, hey, we used to predict 80% plus. Now it's a fight for every deal, and you have to be on top of it. You can't just send them a mail and hope that they sign at the sticker rate. So people are advocating more for themselves, whether out of pressure or out of the availability of options. I think that's how they're adapting, and I think it's good. And what I say is, even if we want to help every Canadian and get a mortgage from Pine, but sometimes we're not the right option for them, even if they don't choose to go with us, I hope that we at least brought their costs down in some way.
we see a lot of re-amortization of the loans. So many customers decide to re-amortize to lower their payment. We see way more refinance than what we would see in the usual market, where they would just either switch or renew. There's way more refinance that we've seen. So consolidating debt within their mortgages. It's all things that we see happening quite a lot right now, and this is how customer adapt. And I think lenders are trying to propose intelligent solutions so they don't put their client in trouble.
We'll move into the last topic: future outlook and strategic vision. Let's start with the strategy, so that you all have different strategic hats. So what technologies and partnerships and business models will define the next wave of innovation in the Canadian mortgage lending market?
So for us, we're trying to bundle all the different pieces that happen to somebody. So we also, in addition to having a mortgage lender, have a real estate brokerage. And people can now start finding their home, financing their home, owning their home with us. So in terms of trends, I think people are going to continue to be advocates for themselves, do more work on their own time before getting to the point of getting expert advice, whether that's a realtor or that's a mortgage advisor. And I think people are going to say, okay, if I'm doing all these things, what kind of benefits can I have together? And I think we're going to see that through the lens of home ownership. I think on financial services, there might be somewhat of an unbundling. People are moving to more online managers, or their wealth managers retiring, so they have to decide what to do. But I hope that the trend that we see in real estate is people starting and finishing their journey in one place.
Our vision and our mission is to build the Canadian mortgage ecosystem of the future. So we do 2/3 of our business with our own brands, Nesto and CMLS, and 1/3 of our business white labeling our technology, partnering with many lenders across Canada to enable them to bring more efficiency for customer. And I think if we bring more efficiency for everyone, it should benefit the customer at the end.
On top of all of that and all sorts of digitization, my hope, and maybe this is slightly off topic, that there would be more digitization in municipal government.
So we'll all have digital mortgages and everything in 5 years.
Yep.
All right. Well, thank you very much, 3 leaders of the industry.